Today on the WEInvested podcast, we have Fred Moskowitz. He is the alternative investment expert, a public speaker, and an author. Fred, how are you doing today?
Hello, Wesley. Doing fantastic. Great to be here.
Absolutely, absolutely. Thank you so much for joining me, and I'm excited to learn more. So, before we get started, would you mind letting the people know where they can find you on the internet, whether it's social media or, your website?
Yeah, absolutely. Uh, Best way to connect with me on the internet is to visit my website, which is fredmoskowitz.com. And if you prefer an easier spelling, you can visit giftfromfred.com. And that'll take you to my website. You can sign up to receive my newsletter and some free gifts that we have available. And alternatively, if you prefer to use your mobile device, you can text me by texting the keyword money to this number, 215 461 4433, and follow the prompts. So great to connect a few different ways.
Absolutely, absolutely. So, I just wanted to start from the beginning, man, and talk a little bit about where you're from and where you grew up.
Yeah, absolutely. I'm from Philadelphia. A lot of rich history here, and a lot of excitement. A little bit about my background, Wesley. Um, I started out having a very long, successful career working as a computer engineer. And I spent a lot of time working at technology and startup companies. And what happened was that I watched my whole industry get turned upside down because we went through the bursting of the dot-com bubble. And that was immediately followed by the September 11th terrorist attacks. So, as you can imagine, all of this turmoil in the world and the economy was just in shambles at that time. And so, through that, I realized that I was way too dependent on the income for my job because that was my only source of income. And I loved the work I was doing, but my job had all of these circumstances that were out of my control. And so what I learned was that no matter how talented of an engineer I was, or how valuable of an employee I was, if things weren't going well at the company or in the industry, that I could quickly lose my job through no fault of my own. And so I came to this realization that I needed to have other sources of income, diversifying my income streams so that I wouldn't be depending from the paycheck from my job. And so that led me to getting started in alternative investments where you're buying and building assets that generate income for you. Got started with real estate, different types of asset classes there. And after a couple of years, I got learning about note investing. And I quickly was really intrigued by it because what I saw was that it was something that you could really leverage and grow into something big. And so for the past dozen years or so, that's been my main focus is buying and holding mortgage notes on residential properties all over the US. And that's my main business focus now.
Man, that's incredible. I mean, and note investing is something that I've heard about. It's something that I've heard about, um, only heard a little bit about. So
Mhm.
I'm not extremely familiar with it. So I'm definitely excited to learn more about it. And I want to ask, how did you stumble across, this specific type of alternative investment?
Well, yeah, it's interesting. I when when I was involved in real estate and building my rental portfolio, I was doing a lot of education, taking advantage of education. I joined my local real estate investment group, and so through my education, I would sometimes learn about buying and selling property with seller financing, where the seller of the property would create a mortgage and carry financing for the buyer. And then that note, the holder of the note could just sit back and collect payment stream every month, or they could sell the note if they ever needed liquidity. I thought that was really intriguing, and it was something that it seemed like the people that were more experienced were a little bit more involved in this. Um, but after a few years, I had the opportunity to actually buy mortgage notes. And so when that came out of a relationship that I had. And so I went all in because when I saw that opportunity, I knew what it was. I knew what it was. And what I really liked was that you step into the shoes of the bank, essentially become the lender. And what happens is that you transition from being the one making the monthly payments to being the one receiving the monthly payments. And so that just gives you really a high level of stability and predictability in your cash flow and income. And so I really was intrigued by this. You know, Wesley, a lot of people get involved in investing in real estate, and it's a great asset class. But what I'm talking about, it's investing in the paper, the notes and the mortgages associated with those properties. So it's all part of the finance side of these transactions. And I find it very interesting. And a lot of real estate investors, they don't pay any attention to it. And for most people, when they think of a note and mortgage, they think of being the borrower, but not as being the lender. And that's essentially what we're doing. And so through note investing, you're investing in an asset that is backed by something with tangible value, right? The real estate. There's a payment stream coming from the borrower on the note. And so you can earn a nice rate of return. And it's very easy to scale, very easy to scale. And so when I saw those aspects, note investing became very appealing to me.
Absolutely. I mean, and so correct me if I'm wrong, but the premise of note investing is a person goes and takes out a loan to purchase a home.
Hmm.
And so now they have a monthly mortgage payment. So the bank owns that home, and that note or that monthly payment is owed to the bank until the borrower pays off the house in full. But then the bank turns around and sells the loan or the note on the secondary market, and
Yes,
then you now become the borrower, and
the lender.
the lender pays you every month. So what is that what is that difference between, do you receive the interest, do you receive the principal payment amount, like how do you
Yeah,
get paid from that?
you receive you receive the payment, which is whatever was agreed to in the terms of the financing when it was set up. And so that's going to be amortized, an amortized payment consisting of principal and interest. And so when you buy a note, there's a contract. That's the note. It's a legal document between the borrower and the lender. And so when you buy the note, you have to conform to all the terms that were agreed to. That doesn't change. The interest rate doesn't change, the payment amount. And so the lender or the seller of the note usually will sell that at a discount, slight discount for less than the amount owed. And so that helps to drive up your rate of return. And there's this whole secondary market that exists where notes are bought and sold every single day, right? I'm sure many of your listeners can relate to this experience where, let's say you go and you buy a property or you refinance a property maybe that you own. Okay. So you take out a new mortgage, but what happens is within 3 to 6 months, you get a letter in the mail from the lender saying, "Dear Mr. and Mrs. Homeowner, we're writing to let you know that we've sold your mortgage. And starting next month, please send your payments to the new lender. Here's their address. Here's their contact info. Make sure you send your payments to them starting next month. And by the way, don't worry, none of the terms of your mortgage will change. The interest rate, the payment amount, all of that stays the same. However, starting next month, please start making your payments to the new lender. And that's it. And so just about all of us have been through that first experience, that firsthand. But what has happened there is that behind the scenes, that loan was sold on the secondary market. And the new lender went and bought that and added it into their portfolio. And so that this is what happens. It's very common. And loans often will get originated and then quickly sold. They'll get put into a mortgage-backed security or some investment product on Wall Street. And then after a few more years, that security will get broken down and all the loans will get resold again, and they'll get sold to hedge funds and different note investors. And so that's how they happen to change hands over and over again. And it's very common. A fund or an investor will buy a note, hold it for a few years, collect the payments, and then when they need liquidity, they'll sell it again. They'll resell it because they need to recapitalize to get into a new deal or a new transaction. And so this happens all the time. And that's how notes get bought and sold and become available to us as investors.
So
And yeah, I speak with a lot of investors that always ask these questions because it is very intriguing, and always the same question: where do you find notes? How do you find them? How do you buy them? We didn't even know you could do that. And that's what led me to write a book on note investing, which I really put a lot of my heart and soul into putting that together with a good high level introductory overview of the whole industry and how it works and how a new investor can get started and get involved.
absolutely, man, that's incredible, and we'll definitely um touch on the book and focus on the book. But I want to ask before we get into that.
Mhm.
So what are the risks associated with note investing? What happens if the lender or the borrower cannot make that payment, or defaults or foreclosure? What are the risks associated with this asset class?
Yeah, there are definitely risks involved, and quite a few. But I'll give you some of the common ones. A few risks are, first of all, that as you mentioned, the borrower can default. Right, defaults happen. They don't happen a lot. The default rate is quite low right now compared to historically, but they do happen. But what I find is that usually when there's a default, in most cases, it's a temporary situation because life happens, right? Someone maybe had job loss, they got laid off, or their company closed down and they lost their job, or there was some kind of a health issue where the borrower is not able to work because they're in the hospital, or they're sick, or a death in the family, or divorce. These things happen, but for the most part, these are think of them as it's a temporary hiccup. And what happens is, with given enough time, people are able to they'll get back on track, they'll get caught up. And so a lot of times it's just a matter of good dialogue between the borrower and whoever's managing the note. We use loan servicers, note servicers, servicing companies that handle a lot of this for us. They handle the day-to-day hands-on activities like keeping track of the accounting on the note, talking to the borrower, answering phone calls, sending compliance letters. So if you think about the way a property manager manages a property on behalf of the owner, a loan servicing company manages the note on behalf of the lender. Same idea. And so they're the ones that take care of a lot of the day-to-day activities. So that's one thing we do to manage that risk. But other risks, there could be risks like other liens on the property, or property taxes not getting paid, becoming delinquent. That's really up to the lender to make sure that that is monitored and tracked, and everything is kept up. Same goes with insurance. This is the reason why lenders usually will escrow for taxes and insurance. It's because that way the lender can make sure that those items get paid on a timely manner, and there's not a problem there. But other risks are, property values could go down and change the equity position on the note. Um, Governmental risks could be compliance changes, laws changing that impact lending, that impact um, consumer consumer laws, all of these things. And so it is something really to be aware of. And part of that means having a good team. A good team includes legal counsel in the states where your notes are, so they can advise you and provide you guidance. So there are a number of risks. However, if you have the right systems and relationships in place, it goes a long way towards managing and mitigating that.
Absolutely. So what would you say are some um, you know, items or things that you look for when deciding on a specific note to invest in?
Mhm.
What are the criteria that you personally like to see before you make an investment?
Yeah, some of the criteria we look at, there's quite a number of different ones. I really cover a lot of this in my note investing book. But some of the criteria, we look at the real estate market, right? All real estate is local. And so, and when we buy loans, we'll buy them in a pool, which there'll there'll be a mixed pool, and so we'll look at the location, the local real estate market, doing some research there. In addition to that, we look at the track record and payment history on the note. The note could be paying on time every month, clean record for years and years and years. Or maybe there's a note where it's a good payment history, but once in a while there's a late payment, or late, or a couple late payments, and then they get caught up again. So you see that. Um, Other things we look at are the servicing records, so the records on the account. We can go back in history, and looking at the track record of the seller of the note. And this is something that I recommend. It doesn't matter what kind of investment you're getting into, any business transaction. Think about this. Do you know who you're dealing with? Do you know them? Have you done some homework and see, are they a frequent flyer in the county courthouse where they are, or where their entity is? Is there court actions against them? Like, really pay attention to this, because there are there's plenty of great people in business to do business with, and then there's others that they don't have a great record. And I've seen people get into bad deals before. That really it's not a problem with the deal; it's a problem with the counterparty, and it could have been totally avoided if they would have spent 10 minutes looking up the other individual using Google and a couple search sites to see, right? Because any court activity, it becomes in the public record. If there's a lawsuit, if there's judgments, it's public record. So it becomes not that hard to find out. But that's a huge risk area that people should look at. And I don't care if you're buying a business, buying a rental property, buying a note, spend some time looking at who you're transacting business with. and that will save you so much headache.
What is the barrier to entry to get started in note investing? Um,
Yeah.
what are the different price ranges, different investment amounts, or different, um, just startup costs in order to actually purchase a note?
Yeah, that is all across the board. There's no set amount. If you're buying individual notes, there are notes you could buy notes that have a $5,000 loan balance up to over 1 million. You know, those big jumbo loans, they all exist and everything in between. If you're investing in a note fund that's managed, um, where the fund manager is raising capital like a real estate syndication, pulling the capital and going out to buy notes, they'll have minimums. Like, I've seen minimums of 25,000, very common to see 50 or 100,000 and up. And so it's the same thing, it's all across the board. And so think about this, just find what's right for you. And if you have a set amount of capital that you want to spend on notes, I would even recommend don't put all your money into one deal. Try to spread it out among a few smaller deals for diversification purposes. That's really nice strategy to use. But if you're buying individual notes or investing in a note fund, you will find a broad range of price points, minimum amounts, and rates of return, which will vary as well. But in general, the more risk you're taking on, the more problems you're taking on, the higher the rate of return that you're going to see.
Mm, absolutely. So, I mean, you mentioned earlier, when you started your financial freedom journey, you were investing in rental properties, you were building up your rental portfolio. But then once you discovered the mortgage notes investing, you kind of shifted your focus there and made that the main business and the main focus. So what was it that attracted you to the mortgage notes and made you want to put your energy and time on that
Yeah,
side of the business?
I was really drawn to the cash flow, steady cash flow, and the ability to scale. And the fact that just like real estate investing, you're able to buy the asset at a discount to what at a discount. So when you do that, like with real estate, you make your money, your profit when you buy.
Mm-hmm.
That's a big part of it. But that was very appealing to me. But I like the scaling aspect of it. It allows you to ramp up into a large portfolio, and you're really bound by the capital you have and not much else.
Absolutely, man. And so when you say scale up, how can you scale up in the note business industry? Like, I mean, it must be a repeatable process and system that you have in place. But when you say scale up in this specific sense, what does it mean?
It means growing a portfolio. You might start out with 3 or 4 notes, and then the next thing you know, you're looking at buying a pool of 10, and then you bring those in, and maybe you sell a couple of notes, r- gather capital again, and go out and buy more, buy another pool. What happens a lot is your transactions sizes start to grow larger and larger, and even if you don't want all of the notes, you could still buy a pool, sell some, and keep some for yourself, and growing and growing along the way. And so that's what I mean by scaling. But it's not unheard of to grow into pools of hundreds of notes or larger. Some large note funds, they have thousands of notes in their portfolio, and they started out small. But being consistent and persistent over time, you can really scale, as I said, and you're limited by the capital you have.
You mentioned that you have a loan servicer, um,
Mhm.
which is kind of similar to a property manager. Is How passive can note investing be? Is it passive or does it take some active management? Like what does that look like?
Yeah, it is. It definitely takes some active management. If you're buying individual notes as an investor, yes, there's ongoing management that you need to do. You do have a lot of help from loan servicers. However, you still have to monitor your portfolio. That's on you. But if you're looking for a passive approach, a note fund is a great way to go because then the fund managers and their team handle that active management, the monitoring, they take care of the due diligence. And so for an investor, it really can be passive because the investor brings their capital to the table and then they're leveraging the expertise, experience, the relationships that the fund managers have. And so that becomes a really a great win-win situation for everyone. And so it can be active if you want to be active in the business, or for someone that prefers to be passive, that's an option as well. And there's no right or wrong answer. It comes down to how much time do you want to dedicate to this. But I would say this is a full business. So if it's something you want to do, that's great, but you need to put the time in and dedicate the proper time.
Absolutely. So how is so like with the regular investment, like a regular stock or something, you can track the growth or the losses just by looking at an app. You check the price of the asset and you see what's going on. You can tell when the monthly or when the dividends will be paid out. You can kind of track it easily. Is it the same with mortgage note investing? Can you easily track that, or is that something that you kind of have to rely on the loan servicers to do?
Yeah, you do rely on the loan servicers. However, it is easy to track. The loan servicers, most of them have a nice portal that you can access online. And so you can go in, look at the whole portfolio and see the loan balances and the payments coming in and what's going on with each loan. So you can get a good look at the whole portfolio and then dig down by one on the loans as well. And so that always gives you up to date information on what's happening and transactions going on.
Absolutely. And is there a particular website, like a favorite website that you have where you go to look for these notes or where you go to kind of find them? Are there
Yeah,
what is your preference?
yeah, for finding them, really my preference is it's through personal relationships. Those of us in the note investing community, it's a small world. We all know each other and we all buy and sell notes to each other all the time. It's somewhat amusing, but really it's about building those personal relationships, networking, getting good at networking and traveling to conferences, meeting people in person. And that's how we do it. That's how we do it. A lot of things get done with a couple of phone calls and a handshake, and then we send a purchase agreement over to be signed and funded. That's how a lot of this happens. Um, and so the biggest part is staying in touch with people and learning about uh, funds that are buying notes and selling. Some funds they'll cycle through a portfolio on an ongoing basis, and so they periodically will have notes for sale. If not every month, at least once a quarter.
Mm, mm, absolutely, man. That's great information. I mean, and you also talked a little bit about um, being an author in the books that you've written, and you have a book on note investing titled "The Little Green Book of Note Investing."
Yes.
So what was the vision and the idea behind writing this book?
Yeah, the vision behind writing this book is really to share my knowledge and expertise with people. I love giving back and contributing. And what I set out to do was to provide a high level overview of the industry and how it works, and in a way that someone that's just getting started could read the book and have a good understanding of how the note industry works. Why do banks sell notes? How to go about finding notes, how to analyze notes and do due diligence on them, how to use self-directed retirement accounts to buy notes as a source of capital. It's a great strategy. So I cover a lot of that, and really the main thing, it's that due diligence. It can get complex and involved, but we give a good high level overview. So for someone getting started, they can really hit the ground running.
Does that due diligence process make or break a deal?
I think it makes or breaks you as an investor.
Mm.
Keeps you from losing money, because if you skip steps, you can lose a lot of money very quickly. And so that this is important. It's important to understand the property values. It's important to be able to determine if there's delinquent taxes on a property where you're buying the note, and what to do if you find that. It's very important to be able to investigate a note seller and learn about their background before you get involved in a transaction with them. Super important. And learning about the different vendors you need to be effective in the business, because let's face it, we can't do everything ourselves. There's too much. There's too much. And so part of the winning strategy is delegate and outsource skills to the vendors that they're good at that. They do an excellent job. And so you hire them, you bring them on your team and let them handle that for you. They do a lot of the heavy lifting. And that's super important, because as a note investor, your jobs, most important jobs, are to find notes to buy and manage them and raise capital. And think of that. Everything else can be someone else's job that you can outsource or hire out to contractors to help you, so that you don't do everything yourself, because you're going to quickly get bogged down. It's like any other entrepreneur in general has this struggle, and it's a delicate balance to find what works for each of us as an individual.
What are some of the roadblocks or lessons that you learned early on while investing in notes?
Some of the lessons I learned early on, um, well, I definitely got into a couple of deals that didn't go well, that had to do with the seller. And so I quickly learned to really pay attention to who I was conducting business with. That just comes down to their reputation. Another thing is spending time working on very small deals. I quickly found out that it you're going to spend the same amount of time and effort and work and expense on a note with a $5,000 loan balance as you would with a note with a $50,000 loan balance, or even a $500,000 loan balance. It's the same amount of work. And so that really impacts your rate of return if you're working on a lot of small notes. So I quickly learned to stay away from those, not because you can't make a profit, but it's just that my efforts can generate better results on a different type of note.
So, you mentioned that you've been in the industry for over 12 years now,
Mhm.
just investing in notes and working in real estate. So at this point in your career, how do you define success?
How do I define success? Couple of characteristics. For me, it's a big part of it is mindset.
Mm,
Mindset is the ability to solve problems, the ability to persevere when things aren't going well. Because for investors, you can do great when things are going well, the economy's going well. But what about when there's a downturn? How do you do in that? And that's a big part because everything's cyclical. There's going to be up markets and down markets. What I love about notes is that the income is pretty steady, even when property values drop, even when there's a downturn in the real estate market. People still pay on their homes. People still want to live in their homes, and that's why rentals don't go completely vacant. That's why uh, borrowers continue to pay on their loans. Very, very important. And another aspect of the mindset is always growing, always learning. I consider myself a lifelong learner, right? There's always new strategies, new techniques, new changes, new technology.
mhm.
Technology is evolving faster than ever in our lives. It's an exciting time. I think that during the pandemic, that accelerated like 10x, didn't it? The
Absolutely.
evolution of technology and tools. And so always seek to be learning new skills, new abilities, whether it's business or leisure or personal. It expands your mind. Expands your mind. It gets you in a state of curiosity, and that sets you up for success.
Absolutely, man. And one of the things that I like you just mentioned is that even during a down market, even during a recession, even during a housing crash, that no investing can still be a profitable venture because people need a home, people need somewhere to live and stay, and they don't want that taken away. They don't want to lose it. They don't want to go through foreclosure. So, I mean, it sounds like if the due diligence is done correctly, then it could be a recession proof business.
Yeah, it can be. It won't be without some problems, but you if you're set up well, you're going to do just fine. It's the same thing with a rental portfolio. If you're offering a quality product to the marketplace, you're always going to have good tenants. People want to live in a good place and take care of it and be proud of where they live, and they'll appreciate the product you're bringing to the market. And so that's always something to really keep top of mind is deliver value, deliver a good product to the marketplace, and you'll always be taken care of. Always.
So, what does the future look like for you, man? I'll say the next 12 to 18 months in the no investing space.
Well, in the note investing space for us, it's to continue to grow, building relationships, as I mentioned earlier, building relationships with investors, building relationships with colleagues and in our community, future business partners and transaction partners, and vendors always. And getting out there, getting out in the world, meeting amazing people that may be in the node investing business, or they may be in a completely different business. But getting around growth minded individuals is always a good thing. And that's something that we always will continue to pursue. And writing, working on the next book project, which is something I love doing, bringing and sharing ideas with the community. It's wonderful.
And how can people get their hands on the Little Green Book of Note Investing? Where can they purchase the book and get the
Yeah,
updates?
best way to find the book. You can go to my website. There'll be a link to it, but it's available on Amazon. Easiest way to find is go on Amazon. You can type in the title, The Little Green Book of Note Investing, or look it up by my name. It will come up.
That's incredible. Fred, thank you so much for your time today, man. I mean, you've shared a lot of valuable information, man, and you definitely piqued my interest, man. And it's something that I want to learn more about and get involved with myself. So thank you for sitting down with me tonight, man, and just sharing knowledge.
Thank you. Thank you for having me on, Wesley.
Absolutely.